Good morning, Paul Georgi from Allendale. It's March 15th, 2010. The markets this morning looks like we're going to start out a little weaker in the grains, steady to two lower pretty much across the board. Outside markets are providing a little bit of help there as far as the macro selling and the commodities here this morning. Dollar is stronger, up 26. Crude oil, as we speak, down over $1. Metals are slightly higher at this point in time. Silver is a little bit lower. Stock market's down here this morning. So a lot of uncertainty, I guess you might say, but no real direction in which way this market's going to go here this week. We haven't seen that yet. We do have some things happening that can influence prices here. We've got the Fed scheduled to have their meeting on Tuesday to come out and see if they're going to raise interest rates or what might happen there. So we'll be watching that very closely. Weather, another factor that's going to influence trade. It looks like we're going to have spring-like weather here for the next 5 to 7 days into the weekend anyway. And then we might get some rain after that. But snow will melt, and producers will get anxious about getting in the field and getting some work done. The other thing is South America. South America's harvest is moving along very well. Beans are being harvested, and we expect that more beans will be sold out of South America. The problem that they've got that is still an advantage to U.S. soybean producers is the exporting of their beans out of the country. They're having a real slowdown at ports, and purchasers of beans such as China may not cancel as many beans as people think, simply because they need the beans and they can't get them out of the ports in South America at this point in time because of the backlog. So that's something that is a bit supportive, but yet overall generally weak to the soybean complex. Soybean futures technically closed weak for the week last week, and that should weigh on us here this morning. Any kind of rallies will probably be met with some selling pressure. It looks like the next downside target is around 9.10 to 9.13 in the May contract. Resistance crosses at 9.33 and then up again at 9.40 to the 43 level. In the corn, the support has been very good around the 360 area, 359 area. In the May contract of corn, we expect that to hold. However, if because of light trade, if they push through that, there will be some stops building under that area, I'm sure, that could take us down. And a close below that 359 area, I think, kind of opens the door for a move all the way down to the 346 level. So those are things we've got to be watching this week. However, I think in the corn complex, we do have a much stronger attitude there that we are getting near a low. People are concerned about getting the crop in the ground, getting it in there early, even in the south, where planting should be underway already. They've got some slowdown. So we've also got this report at the end of the month on March 31st on planted acreage. That will be watched very closely, and I think will provide some support to this market. As a reminder, Allendale has just completed its report, and we should have our estimates out, and after that we get through doing the calculations here later this week. So stick with us, and we'll get those numbers to you, and you can give us a call, or we'll be putting those numbers out here later on in the week. The livestock trade, we had cash cattle close out very strong for the week, 94 to 95 in the south. Packers had to come out and pay up for cattle. The real question is, how long can they do this? We had futures markets close extremely strong. Cutout values were up on Friday at 57 cents higher for choice and 13 cents higher on the select. the question is, how long can beef prices support the cash cattle prices? The main reason for strength in the cattle is certainly the supply of market-ready cattle. Feedlot conditions continue to be a problem. We're at that time of year where it takes a long time to dry out these lots, and then any kind of rain you get just sets you back several days again as far as the drying out of these conditions, and these cattle gaining and catching up on the weight gain that they needed to because of the poor conditions. So that balance is going to have to be watched very closely. Another thing is the CFTC did release the commitment of traders and showed that we have record fund long positions in the cattle complex right now. That's got to be watched very closely, because when that tide changes, you want to be short. And we are suggesting to find ways to protect the downside in the cattle here in the near term, as even though trend is up, with some of the indicators like the fund situation, you need to be protecting some of these good profits that you've got in cattle feeding operations right now. In the pork complex, packer margins continue to force the packers to bid lower. For hogs, they're lower here this morning, anywhere from 50 to $1 for the cash. They need to try and improve their margins. Product there continues to be weak. Ham prices are lower. Poultry prices are also providing some weakness to the pork complex. So we've got a strong technical picture in the futures, but we need to continue to close strong here, take out this double top that's on the charts in the April contract to continue that upside and upward trend. If you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We'd be happy to answer any questions that you might have. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.